I'm really delighted to move on to the sort of main event. The main event of Flower Monthly this month is going to be our invited speaker. We have Dr. Robert Norvill of Banking Circle. He is a senior data scientist working in the area of finance and banking. And in fact, I can't think of anyone better in being able to bridge two important worlds, the worlds of finance and banking and the worlds of federated learning, which seem to be unavoidably heading towards each other as we start to understand how to untangle all this financial regulation that's so important. So Robert, thank you so much for joining us today and being willing to speak to us about the important work that you're doing. Thank you so much. I'm going to stop sharing it and give you the floor.
Great, thank you very much, and thank you for having me today. So, yeah, my name's Rob, as has already been mentioned. I'm a senior data scientist at Banking Circle, and I spend at least some of my time kind of leading our effort in federated learning for anti-money laundering. So today I'm going to take you through who we are as Banking Circle, our present AML solution, and how we use various tools, including machine learning, to do what we need to do. Our use case for federated learning, and then the federated learning solution we've built, and there I'll cover kind of some of the experiments we've run and what it looks like from our point of view as a bank and how we see it going forward. So Banking Circle, as the name suggests, we are a bank. If you haven't seen us on the high street, that's because we're a B2B bank, but we do operate around the world. We have offices in Copenhagen, London, Luxembourg, and Singapore. At present, we facilitate 10% of Europe's e-commerce payments flow, which means we're handling 2 million payments every day. So when it comes to kind of AML requirements and compliance, we have to be pretty on the ball. We've got a lot of payments going through us, and we have to make sure they're all processed properly. And we need to make sure that everything we do can scale in accordance with that. So our kind of overall goal as a business is faster, cheaper payments. We think that cross-border payments, should take 5 minutes and cost 50 cents. At the moment, they take 5 days and cost 50 euros. But we're here to solve that problem. And we do that by having all the related financial infrastructure that are required for payments, cross-border payments, all in one place. So what do we do for AML currently? Well, not everyone works in banking or finance, so I'll start with a definition of AML. Eurolex describes money laundering as the process by which criminals sorry, my screen went for a second. The process by which criminals conceal the illegal origins of their property or income. And anti-money laundering is what we have to do as a bank to prevent this happening. So for us, it means looking at payments. We process, as I've just said, millions of payments, and we have to look at every single one of them to make sure nothing untoward, nothing illegal or fraudulent is happening there. And if we do find something that looks suspicious, doesn't look right, then it has to be reviewed by a human, by one of our analysts. And then if it's confirmed that something was wrong, we have to report it to financial regulators. So in the UK, for example, that's the FCA. There's been a trend in recent years for kind of an increasing regulatory burden on banks. So there's more and more legislation around stopping money laundering and financing things that shouldn't legally be financed. And it falls to the banks to make sure that this doesn't happen. So one thing is that we're having more and more payments to process as a growing bank, and the other is that there's more and more that we have to do to remain compliant with current laws. So this is what our current setup looks like. I won't dig into all the details here, but there's a few things worth noting. So payments come into the bank, and then we have a number of automated steps to kind of highlight which ones we do need a human to look at and which ones we don't. So the first thing is kind of static rules, which might sound a little old-fashioned if I'm speaking to a machine learning audience, but payments are very good structured data for the most part, so we can do quite a lot of filtering just with static rules. So that's our first thing. Then we have the supervised learning models. So this is where we feed payments into a pre-trained model to try and figure out whether they look suspicious or not. There's a few other steps in between, and ultimately the ones that our models say look suspicious, an analyst, a human, checks. And they kind of give us our ground truth. So what the analyst tells us is either yes, this is a fraudulent payment, or no, it isn't. And that's fed back into our machine learning models. And when I come to the federated learning part, that very much fits into the supervised models. So we're kind of retraining for federated learning for certain things, which I'll cover in a second. I think a few key points about the machine learning supervised learning part is we use TensorFlow neural networks at the moment to make these predictions on payments. Input information for the model, so our features, you could probably guess some of them. It's payments information, so the amount associated with the payment, the names of the sender and receiver. If there's a free text message, we'll analyze that. Which regions is the payment going to and from? We do have a lot more features, actually, and some of them are kind of calculated features, which we use historical data for. But to give you a flavor, it's those kinds of things going into the model. Output is we would call it a risk score, which is how suspicious does each payment look. So 0 is completely fine, and 1 is the model telling us there's something wrong with this payment. And then anything above a certain threshold, we send off to our analysts to investigate. And I think another thing that's particular to payments data is it's extremely imbalanced. So there aren't actually that many bad or fraudulent payments going around, despite what the news might tell you. So we can have millions and millions of payments and still not have much to work with in terms of true positives. So there are ways to counteract that, but it's a kind of peculiarity of payments, let's say. And I think it's probably also worth mentioning here that we need to be kind of highly accurate on all fronts. So if we're missing potentially fraudulent payments, then you can land yourself in a lot of trouble with the regulators for not doing what you need to do as a bank to make sure you are stopping fraudulent activity. But if our false positives get too high, then we drown our analysts in work and we can't check the payments anyway. So there's a sweet spot, but it's a very small sweet spot. We have to be fairly accurate on all counts. So to get to federated learning, Banking Circle is now opening in the USA as well, as in Europe and other places around the world. And our US entity will need to do the same or very similar in terms of AML and transaction monitoring. But because it's a new entity, it will start life with 0 payments. It won't have any. And because of data privacy and data protection, it's sometimes tricky to kind of share personal private data, which transactions certainly are across borders, especially if you're talking about going from Europe to the US. It's a little easier the other way around, though. So we drew up some goals that we wanted to achieve with federated learning. What we're looking to do is build a kind of performant US payments analysis system without enough data. And when I say enough, I mean enough data to train a standalone machine learning model for the US. As I mentioned, because of this imbalance, we can have potentially a very large number of US payments and not still have enough data. So we could just use the EU model in the US, but we think we can do a lot better than that with federated learning. So we can begin to build a US model even with relatively small amounts of data using federated learning, and I'll explain how on the next slide. Another goal is obviously, as I mentioned, be data protection compliant and data privacy compliant, which makes federated learning and Flower a natural fit because we don't move the data. And then we have a kind of more medium-term goal, which is even once we can train the US model standalone, so we have enough data in the US, is there anything our EU model can learn from the US model? So we will keep federating even when we have a lot of data and see if there's anything that these international payments in different parts of the world can learn from one another. So I'm not sure, honestly, if this slide is redundant, but I don't know everyone who's watching. So I thought I'd give you a quick, what is federated learning? For our purposes here, I've kind of defined it as training a model across multiple servers using local data samples without exchanging the data. So if you have no idea what federated learning is, hopefully that gives you some idea. For us, for this use case, at least in practice, this means that each client trains a model locally on their own data, usually for one round. The client sends updates to the server, and the server aggregates them. We use a particular algorithm to do this. Those aggregated updates are sent back to the clients, who begin training again for one round, and then we return to step 2. And we can do this as many times as we need to get good and accurate results. So allow me to introduce FLAME, Federated Learning for Anti-Money Laundering Enhancement System. This is kind of a real high level of our architecture here. So because of the nature of our problem, we don't have a lot of clients. I know a lot of federated learning use cases do, but we have 2. One is our US bank and one is our EU bank. They both have as their data sets their own local data. So payments originating in Europe or payments originating in the US. And the Flower server is obviously responsible for aggregating the updates that arise from training the model on these 2 data sets. We use Azure for pretty much everything internally. So all this is in the cloud on Azure virtual machines. At the moment, we still use a short-lived Flower server. So when we want to train or retrain, all these things spin up, do the training for as long as it takes, and shut back down again. And we use the classic FedAVG, or FedAverage if you prefer, algorithm at present, although obviously there might be scope to try using different ones in the future. So just to elaborate a little bit on the use case and what we expect FLAME to do, we're primarily concerned with increasing performance for the US side. So we're already live and running in Europe with plenty of data there. So when we're training our federated model, we're training a model for the US only. So our primary thing is, can we get a better model for the US side? Which makes the situation kind of interesting because we actually don't have to make a model that's performant for all clients, in this case, only the US side, which gives us a bit more scope in kind of what we would tweak and change and how we would change it. When we very first launch, the US entity will start with the current EU model, and we'll do our retraining from there. So the first time we train a federated model, both sides have the EU model, and they train with different data. After that, the starting point becomes the federated model, which is the US model, and we'll retrain using that. Because we expect the transaction volume in the US, or payment volume in the US, to be increasing fairly rapidly, we look to retrain using Flower every week. So as the amount of US payments we have increases, we keep retraining to get higher and higher accuracy, is the idea. And this kind of has a nice kind of passive effect that because contribution to the federated model is weighted based on in our case, the number of payments that each client provides, that the US side takes, excuse me, sorry, the US side takes more and more influence over the model as time goes on. So I should stress that we're not live in the US just yet. Banking Circle is launching in the US, but we're not yet launched. So we don't have real live US payment data. So we set up a number of experiments to try and simulate what we think that would look like. So we took a large number of European payment data, which we do have, and split it in half. So 50-50 split, and each split formed one data set. So one being Europe and the other being our simulated US data set. 10% was taken for eval, another 10% for test from each, and the training data set is oversampled because of our imbalanced data. We did play around with a few things. We played around with using FedAVG, but weighted on the number of true positives, but simply weighting it on the number of payments trained on, provided the best results for us so far. In terms of testing, we trained baseline models. So a baseline model we take to be a model which is trained on one of our two data sets. And then the federated model is trained using the two clients, EU and US, each which have one of these two data sets. And the results, I'm pleased to say, look like this. So this is the federated model versus the baseline model. It was trained on one of the data sets. You can see we get big increases in all three metrics, the largest being precision, which went way up compared to the baseline. So this is exactly what we would both want and expect to see to replicate kind of how we would see it going in the US when we go live. But yeah, especially precision there is way up at 60, 68, 69%, I think it is. So that was great. We then also tested our federated model against a model trained on both data sets. So this is kind of an unfair test, I would say, for federated learning. It's federated learning versus all the available data. And at least for accuracy and recall, they were comparable, which was great news for us. Precision did lose out a bit. Maybe we can also get that there with a little more tweaking. But just as a stress test, we're kind of seeing that for payments data, that federated learning can really hold its own. And then the last kind of experiment we did, so I mentioned that we expect once we go live in the US that the volume of payments increases over time as more and more payments come through the bank. So we took one of our two data sets, split it into 10 parts, 10 chunks, and then ran an experiment adding in an extra chunk each time. So experiment 1 is 1/10 of the data, experiment 2 is with 2/10 of the data, and so on. Here, Flower simulation was incredibly useful because we could essentially do all 10 experiments just in one loop with the simulated client and server inside. So that was nice and easy for us to do using Flower. And the results there, as you can see, the short story is more data, better results. But it was very encouraging to see that this worked in the federated environment as we'd hoped it would. So the leftmost graph there is the final metrics from each experiment, and the other three are the per round results from experiments 3, 6, and 9 respectively. But yeah, again, this was great news for us in terms of simulation and what we would hope to see going live. So that was really good news. Future work, I already mentioned it. The obvious one is go live. We need to see this work with real US payments. So Flame is built and ready to go. So as soon as we have US payments coming in, we'll start running it. Even if it's just one US payment, it'll be run and then rerun as the volume increases. One thing I'm quite interested in looking at once we do have real data coming in from the US is to experiment with different neural network architectures. So I think a more complex architecture might help what we saw in some of our really early experiments if the two data sets were extremely disparate, is that you lose performance overall. It seems like the two different data sets and different models are pulling the federated model in different directions. But my suspicion is that a more complex network would allow us to capture the differences between the two data sets rather than canceling them out. So that is future work. Going beyond that, looking ahead, the experiments we've done here, I think are a pretty good kind of simulation for what we would see with our US entity. But it also looks very similar to what you'd see if you had a kind of inter-organization AML model training. So one thing we're interested in is a potential wider collaboration on kind of anti-money laundering and fraud detection. So it could be the case that Banking Circle trains on its local data, another bank trains on their local data set, a payment service provider trains on theirs, and using Flower, using federated learning, we can produce one more performant federated model overall. So that is kind of where we are now, the experiments we've done, where we want to be in the future. My email address is up on the screen there, so if after this anyone thinks it looks really interesting or has any thoughts about collaboration, you're more than welcome to get in touch with me. Or I'm sure if you get in touch with the Flower guys, they'll be able to connect us as well. Thank you.
Amazing. Thank you for the talk. And so we're getting a few people going to ask questions. And so I'm going to take a few questions now. We have a bit of time. So if anyone's out there, you just raise your hand. We're using the system so we can have a bit more scalability in our Zoom sessions. I'm going to take a question from Pedro. Pedro, I think, was the first to ask. Pedro, I'm going to allow you to speak. Please ask your question.
Hello. First of all, thanks for the presentation. It was really, really good. My question, it's actually about the very last part of your presentation in terms of future work. We have recently participated in a challenge, the privacy, UK privacy challenge from NIST, where we had to create a vertical federated learning solution for this. So we had to consider banks that had information about transactions and these information were divided amongst different banks. So my question would be, have you thought about this kind of approach to federated learning that's not just horizontal, but rather vertical, so that you will have to collaborate with other banks to create a distributed model that will never, let's say it will never be able to run only on one specific bank?
Yeah, it's an interesting question. I think, as I said in the presentation, it's certainly future work for us. But I think there's potential there. I certainly don't rule it out. It sounds like you've already done some interesting things in that area, so feel free to drop me an email if you think it's relevant, and we'll be happy to discuss it further.
Great, thank you.
Sure.
Great. Thank you, Pedro, for your question. Let me just make sure I'm using this thing properly. Okay. Next question that came from Javier. So actually, Javier gave a great talk last week. So it's good to see community interaction here. Javier is at Samsung AI. Good to see you, Javier. Let me let's see, allowed to talk. Yeah, there we go. Javier, please ask your question.
Okay. Yes. Hi. Hi, Rob. Thank you for the talk. So my question is maybe a bit more, also a bit technical, and it's about the data. And in particular, did you have to do any kind of data pre-processing, for example, that you found to be essential for federated learning to work in your experiments? And also, as a follow-up, did you consider any kind of data augmentation that makes sense for your particular use case?
Sure. So I'd say internally, there's a lot of pre-processing we need to do with payments. In terms of it being specific to federated learning, luckily, because we already use AI, a lot of it is done. One particular consideration I would say is when we're making the splits in the data, you have to be careful not to have transactions from the same client in both data sets, because that's kind of cheating, right? And both sides are seeing the same client. So there was a few considerations like that. Exactly how do we form the splits? And in fact, we split the data in a number of different ways. So I have bunches of experiments all done in different data sets, split in slightly different ways. That's an issue for what we're doing now, the simulation. In terms of when we have live data, there's a little bit of a question over whether there will be any features specific to the EU or the US only, so not shared. And in that case, we'd just be taking the common features to both.
I see. Okay. And just one final question. I think you didn't talk about this, or maybe I missed it, but what kind of architecture are you using for this? Is it like it's like CNN, or is like a set of, I don't know, random forest or something?
Yeah, no, just CNN. Yeah, TensorFlow.
CNN.
Yeah.
Okay. Okay. Thank you.
Great. Thank you, Javier. Next let me disable talking. Okay, so next would be
Sorry, just to, if I might, just to elaborate on Javier's question, we do also use tree-based algorithms, but for different stages. When it's supervised learning, yeah, it's TensorFlow neural networks.
Oh, I see.
But
Okay.
there are unsupervised methods in other parts of the chain. Yeah.
Okay, great. Let's now go to Anand Henry. So Anand, I'm just going to open the mic for you. You have a question, please ask your question.
Hi, can you hear me?
Yes.
Okay, great. Hi, yeah, I'm Anand. I'm curious from an economic perspective, like what is the incentive for banks collectively to train the model and get better results? I understand that they have a regulatory obligation to report these suspicious findings, but beyond that, beyond the government asking them to do a reasonable measures, do they have incentives to actually identify the true positives better beyond the reporting requirements?
Sure. No, that's a really good question, and you're right that part of the motivation is just cost reduction, right? You have to be compliant, and if federated learning helps you be compliant more easily or faster, then that's a motivation for banks. I think there is potentially a lot of work that could be done in the future to monetize it based on contribution and things like this. But it's by no means a trivial question exactly how that monetization takes place. But yeah, I think there's a lot that could be done with incentivization to make different players join a potential federated network in the future.
Okay, thank you.
Great. Thanks so much for your question. We should go now to Shinchi. Let's see, allowed to talk. Shinchi, please feel free.
Hi, can you hear me?
Yes, loud and clear.
Yeah, I guess you just mentioned that currently you are only using the features that are common in both EU and US. So do you think there might be features like only existing in US or existing in EU, but still might be contributing further to the models? So it would be more like a semi-vertical settings, some of the overlapping features, but some of the unoverlapping features can all contributing to the like one common models. And also I have another question is that would you be considering like more like protecting methods such as the differential privacy on the secure aggregations? I'm just understanding that there are some papers saying that even if you share your model, you can still leak some information. I'm just wondering, like when you share models between like international, between different like EU and the US, do you have any like requirement or regulations like require you to do some analysis to make sure like the model is secure, like do not leak sensitive information of the clients? And if so, do you planning to implement like further methods on it?
Sure. So to answer the first part, we don't anticipate many features that will be unique to either side. It might be one or two, perhaps, but not a lot. So it becomes a question then of what's worth doing effort-wise. If it starts to look like there's a few really important features that are exclusive to each side, then yes, it might be worth factoring in. To answer your second question, if looking further into the future, there's some kind of inter-organization collaboration between banks, for example, then things like differential privacy become a lot more relevant, and I think would potentially be more necessary there. Internally, we at present don't have to do anything special for it, because although they're different legal entities, we're the same bank. It's all within banking circle. So our main concern there is just not moving the payment. So we don't want to see EU payments sitting in the US. This would be a no for regulators.
Thank you.
Great questions here. Let's see. And so our last question is going to come from Tanner. Tanner, I think you can speak already if I'm right.
Yeah, thank you.
Yeah, great.
Hey, Rob, thanks for the talk. Do you expect there to be patterns which you can only detect if you train a model on the data of two regions, or yeah, how is there any expectation if that will influence the models?
It could be. It's quite hard to say at the moment because we don't have the live US data. I think if we need to, we could probably split the data we currently have. So split the EU data down by country, perhaps, to kind of replicate this a little bit. But that could be of limited use because when it's all inside the EU, you're dealing with more or less the same laws across country, which means the payments tend to look fairly similar. But yeah, it could be something we see when we go live in the US.
Okay.
Did I understand your question correctly? Did that?
Yeah, that was the question. And the second one would be, how would you deal with this without federated learning?
Without federated learning, what we would have to do is more or less run the simplest way would be use the EU model as is in the US until the US has enough data to train its own model, which gives us a potentially large period of kind of suboptimal performance, which doesn't really work with the transaction volume we have and expect, partly just because it becomes infeasible to hire enough people to look at these things manually if you're not accurate. Yeah. I mean, I think there's probably other things you could do, maybe something with transfer learning, but at the moment we see that federated learning gives us the best possibility for this progression as more and more data comes in to get more and more accurate over time.
Cool, thank you.
Great. Daniel, you have the last question.
Yeah, my question goes in a similar direction. I love the point you made that you're now able to use a model and refine a model and train a model in the US even without enough data. And I think this is something that we see in many cases where it's not so much about just improving the model, but really being able to train a model at all. Because oftentimes when you're just starting out, or it's actually the case in many for many tasks, the amount of data you have in a single location, in your case in a single region, is just not enough to train a model at all. A good model architecture, like a modern neural network architecture. I found it super interesting to see the performance difference that you get out of the from using federated learning versus without federated learning. And I wanted to ask you, would you expect the performance difference to be even larger once you have the real US data? Because the US data is probably following a different distribution slightly. And right now, both of the partitions that you have, they're coming from the same distribution. So once you have the US data, you have a different distribution in there. And I would guess that this makes the performance difference even larger, right?
Yeah, I would say so. I mean, the easiest way to prove this, right, is I come back and tell you what happens once we have the US data. But yeah, I would expect it to look something like that. Yeah.
Yeah, we'd love to welcome you back for sure.
But I should say just in closing that Flower has obviously been instrumental for this. We have played with other kind of young federated learning frameworks, but Flower's been by far the easiest to work with. I was looking actually to see if there's any more contributions I could make to the GitHub repo, but Flower keeps doing what I need out of the box. So these guys don't get any of my coding time, unfortunately.
I'm super happy to hear that, but I'm obviously thinking about how we can involve you more.
Yeah, we'd love to involve you more.
Yeah.
Well, this has been a great talk. I haven't heard a better talk on banking in FL ever. So thank you so much for joining us today and telling us all about it. And I was really happy to see so many folks in the community asking really engaging questions about the world of finance, because so many of the data sets, and at least in the research literature, center actually on images and so on. And so there's much more than that sort of workload out there. So this is a great meeting of communities here. So yeah, thank you again, Rob. Let's give Rob a round of applause.
Thanks so much, Rob.
Thank you all. Pleasure.
So then I'll just share the final slide to close the meeting. And that slide is to announce next meeting. We'll be back again 1 month from now, approximately. It'll be the first Wednesday of the month, which lands on April 5th. Again, 5 p.m. GMT, 9 a.m. if you happen to be on the West Coast and various times in between, or if you're elsewhere in the world. The Flower Monthly videos are going to be posted to the URL you see there. Please give us feedback on the Flower Monthly Slack channel if you have thoughts on how we can improve these meetings. And in general, there's the Slack workspace, which is a really great vehicle to not only talk to us, but talk to each other. And finally, I want to remind you all, if you're curious about the Flower Summit, which is basically like Flower Monthly multiplied by 100, and with a physical component, please consider saving those dates in your calendar, perhaps coming physically or at least joining us virtually, registering on the pages that are now on our website live. It's been great connecting with you all, and I will see you next month. Thank you, everybody. Take care.
Thanks.
Thank you all. Goodbye.
Bye-bye.
Thank you.